Good morning, investors and traders. In today's segment, we'll be talking about gold prices, which are on the move. And the question really is how high can these prices can go on the back of the Federal Reserve meeting, which happened yesterday. We'll be looking at some technical price levels and we're defining few opportunities. Before I do that, as always, it is important for me to go through this brief disclaimer, which is right in front of you. If you have any further questions, feel free to ask me. Now, the platform which is in front of you is your MT4 platform. And we are going to begin the conversation by looking at the daily time frame. Very briefly, a little bit about myself. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader with Bank of America and as an equity trader with Bank of New as a hedge fund trader with Bank of New York Mellon and as an equity trader with Bank of America, and currently providing services as a chief analyst for EverTrade. Now, when we look at the daily chart for gold price, we do see that positive momentum creeping in. And I'm really talking about the price action of yesterday, followed by the positive momentum, really this one today. Why that has happened? Well, from the fundamental side, yesterday the Federal Reserve had their meeting. The Federal Reserve made it very clear that they are in no rush to increase the interest rate or to begin the tapering process. Of course, the Federal Reserve will begin increasing the interest rate, and tapering is inevitable. That will happen as well, but not for the time being. Now, all of that focus is going to be towards the next meeting, which will be in Jackson Hole. So for the time being, what we're really seeing is weakness in the dollar index and momentum, upward momentum in gold prices. Now, the first immediate resistance in terms of a gold price is going to be right around over here, 1829 to 1835. And more recently, the prices have been trading between 1791 to 1817, where the price is trading right now. And more importantly, the price is in battle with the 50-day simple moving average, which is in pink. And then you have your 200-day simple moving average, and finally your 200-day simple moving average. What we really need to see is the price crossing above all the three important moving averages. And if that happens, that would be certainly classified as a very bullish signal. Another bullish signal in terms of a gold prices, which is coming over here, is the 100-day simple moving average crossing above the 200-day simple moving average. But at the same time, we do see that this 150-day simple moving average is crossing to the downside, although the price is moving to the above, but it seems like that it may drop below the 100. If that happens, that would be negative, because what we really kind of want to see is the 50-day simple moving average staying above these two moving averages, because that will confirm that we have a lot of plenty of upward momentum. Now, in terms of your opportunities, well, the first support zone is going to be just around the 1789 to 1796. In fact, if you wanted to be a little bit more conservative with your approach, you could potentially redefine that to 1784 to 1792. Now, because this is a support zone, as always, we will change the color for support zones to green, so that when we look at the charts, we know where our support zones. These are our support zone, because followed by this, if the price fails to, let's say, it fails to control, fails to stay in here after its drop, then the next support zone is going to be at 1749 to 1769. But for now, the immediate focus is going to be here. Now, similarly, if the price continues to move higher, and one can actually take the breakout trade right now and put the stop loss just below that 200-day simple moving average and target this particular price level. In terms of your risk to reward ratio, what you will be risking currently is just this much, but in terms of your reward, you are looking at this much. So that risk to reward ratio, or that opportunity, is certainly there. And this, remember, this is only is target number one. The target number two is really going to be from here all the way to somewhere around here. So in other words, that 1874 or at least 1863 is going to be your next target. So right now there is a great opportunity in terms of a gold price, putting the stop losses below that 200 simple moving average, and let the prices continue to move to the upside. Let us know, what do you think about this opportunity? Let us know if you are currently long or short, meaning are you holding it or are you selling gold prices? That's all for now. Remember, don't forget to smash that like and subscribe button. I'll see you guys same place next time.